Hi everyone, it's Chat back again with another video. Today we're going to be talking about Airbnb, now the largest travel company by market cap at $100 billion over Booking.com. Airbnb is down 7.5% on the year and 25% from its all-time highs. For a company in this environment, trading at 15 times sales, it's actually pretty unusual. Only down 7.5% for the year, only down 25% for all-time highs, when other stocks trading on a price to sales basis, making net losses, are getting absolutely destroyed. Airbnb has managed to hold its value, which shows the premium that the market holds this. It recently announced its quarter on results, so I just want to go through these and decipher whether I think it's a buy or not at these current prices. Airbnb, for the first time in a while, has posted an absolutely excellent quarter. Nights experience booked up 59% year over year, now 102.1 million nights experience booked, particularly driven by North America, EMEA and Latin America. Gross booking value 17.2 billion, absolutely excellent, 67% year over year, 71% year over year excluding foreign exchange. Revenue 1.5 billion for the quarter, increased 80% from quarter 1 2019. They're using quarter 1 2019 for the accurate comparisons, which is fair enough as far as I'm concerned, and 70% from Q1 2021, which again, not really fair because that's right in the middle of the pandemic. This is really showing the strength of the travel rebound, as I'll talk about in a minute. 1.5 billion for the quarter is pretty strong. Still reporting a net loss, significantly improved over years prior, mainly due to them now being free cash flow positive and actually getting consistent revenue and not wasting a lot of money. $19 million net loss, effectively nothing on a $100 billion company. 1.2 billion net loss in Q1 2021, so this is a tremendous improvement. And also an improvement over Q1 2019 when it was in a normal scenario. Now it's still a $292 million loss. So it's essentially cash flow positive at the minute. Adjusted EBITDA, 229 million. Again, up from last year, Q1 2021 of 59 million. And for an accurate comparison, which was again a loss in 2019, 248 million. Again, this is just some management comments on those numbers. Exceeded pre-pandemic numbers for revenue, and importantly, they continued to see strength despite the ongoing pandemic, the war in Ukraine, and many macroeconomic headwinds that are working against them. So this is really an excellent quarter. Just goes to show the strength of that travel rebound that is happening in a minute. They've $19 million net loss, as I mentioned, but they're getting away from this and they're spending a lot on the product. There's going to be a lot of product changes in the upcoming year that they're going to roll out very, very soon. And they've seen substantial improvement in adjusted net EBITDA. Demonstrates the continued strength of the business and the discipline in managing the cost structure from their own opinion, and I completely agree with this. I was expecting a bit more of a reaction in the stock today. It was up around 4 or 5% when you consider that the revenue was essentially unchanged in the previous 2 years. It was basically flat from 2019 to 2020, 839 million in 2019. It's now 1.5 billion for the quarter. So impressive this, and to see very little rebound, it says to me that a lot of people are recognising how strong this business is and are just not adequately pricing it in. Their adjusted EBITDA, if you look at the 2019 numbers, that is a tremendous improvement in my opinion. And this business is just moving from strength to strength. Airbnb is always a business that sees a degree of seasonality. Of course, more Airbnb is likely to be put in the summer because people go on holiday in the summer, and more over the holiday period. While they mentioned that the pandemic distorted the historical patterns of seasonality in 2020 and a bit of 2021, or at least the first half, as a result of many travel restrictions and changes in preferences, they're seeing a return of the normal seasonality, which just adds a layer of predictability to this business. Revenues perhaps will be lumpy going forward on a quarter-to-quarter basis, but we will see obviously stronger months for travel than others. But this is just nice that they're seeing a return to the normal seasonality and the demand is coming back strong. As I mentioned, they're now free cash flow positive. They reported 1.2 billion of net cash provided by operating activities and 1.2 billion of free cash flow, the highest ever. Year-over-year increase in free cash flow was driven by revenue growth and margin expansion, as well as significant bookings growth, driving increased unearned fees. Again, the seasonality, cash flow typically benefits from unearned fees that are generated by bookings in the quarter and not recognised revenue until future periods. So there's a bit of odd accounting going on here, but still, free cash flow positive is definitely a big win. As of the end of the most recent quarter, they had 9.3 billion in cash equivalents and marketable securities, which is a very strong position in my opinion. And it is more than enough to fuel their future growth, and now they're free cash flow positive. This will no longer be an issue, and Airbnb can effectively fund its own growth while becoming profitable over the longer term. And they also hold 6.1 billion of funds on behalf of guests at the end of Q1 2022, which again is essentially an interest-free loan to Airbnb. I just thought this was a really interesting excerpt from the Visa Q2 2021. So of course, Visa and MasterCard's reports come out very early on in the earnings season, and they give a good idea of what is happening in the global payment space, and therefore the global people buying things space. And they're seeing robust travel recovery, and they expect continued growth driven by this robust travel recovery and through the enablement of returning to normal, essentially away from the pandemic, and hopefully away from an increasingly uncertain geopolitical environment. And this can only be good for Airbnb in the longer term. Here are some basic valuation metrics from Guru Focus. I'm going to ignore a couple of them because they're a bit wonky. What I'm interested in is price to sales, which is around 17. A good number for Airbnb historically, but of course this is in a much different environment to when Airbnb was prospering and initially on the market. It's a high interest rate environment now, or trending towards a high interest rate environment, and a price to sales of 17 is looking very expensive in the current market, even 80% revenue growth. That being said, this is a historically good opportunity to buy Airbnb at these prices. This is the lowest been for a while. Enterprise value to free cash flow of 42, indicating that this is a company that is pushing its free cash. This is obviously projective based on the current quarter. It's pushing its free cash flow up, and EV to free cash flow of 42 is actually pretty good. Again, not amazing for Airbnb's history, but it is improving that free cash flow significantly. But free cash flow for Airbnb is a bit wonky, as they've mentioned some accounting metrics there. All in all, I'm focused on that price sales number because that's the only one I can look at consistently and compare with Airbnb's history, because it's not consistently profitable yet. And price sales 17 is on the expensive side in the current environment. Overall, I absolutely love the business, both as a user of Airbnb, it's a fantastic service, and as an investor, I think it's doing fantastic. This recent quarter has shown that with increased travel demand, they can put in some excellent numbers. Of course, they're going off pretty weak comparisons from the first half of 2021, so it'll be interesting to see what they're looking at in the late half of 2021 when travel is coming back a bit, and in future years, how that growth rate is effective. But I completely believe in this business. I think it's going to dominate the travel scene in not a lot amount of time. It's definitely a newer way of thinking about this. I am concerned future legislation, because essentially buying up property to be used as Airbnbs is not good for the wider system, and I think governments are going to recognise this and legislate against it. And overall, I think Airbnb will be fine, but will it be a high growth story if this happens? I don't know, but this is really hard to predict, and it's kind of like saying, well, if the government issues laws around Bitcoin, then Bitcoin will be worthless. Like right now, Airbnb is a solid company, but it isn't without its potential headwinds in the future, because it is at risk of government intervention, which is obviously not good. In terms of margin of safety and the price wise, there's not much margin of safety to be had here against all these risks. Price sales of 17 is pretty steep in the current environment. I think this is a fantastic company, and I would kind of be willing to buy in at this price sales on a very small position. I'll definitely be, if the price goes lower, perhaps to the 120, 110, 100 levels, then I will be much happier paying a price sales of around 10 for this company. And because it is getting there, it is getting to inconsistent profitability, but it's definitely getting there. It's free cash flow positive. There's a lot of things to like about this business, but it's not there yet, and I think a price sales of 17 is a bit much for me to be paying in the current environment, but I'm so close to pulling the trigger on this company just for a small position, and then dollar cost averaging over time, because I think this is a fantastic business. Even at $100 billion market cap, I can fully see this being $1 trillion company over the longer term. I think it's a fantastic business. I think it'll be a big mistake for me to miss out on owning this business, but again, I'm thinking over it in the next few days to decide what I want to do. But I think this is an excellent company, absolutely, even if it is a slightly bit expensive at the minute. But this is just my opinion. You should challenge this, of course, in the comments below. And you should not take this as direct financial advice, because that's not what it is. You should do your own research and due diligence, and not just buy based on my opinions. With that being said, hope you enjoyed the video. Like and subscribe if you're enjoying the content and want to help the channel grow. I'll see you again next time.